Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra, with me Shail Bhatnagar. Well, it was a fantastic day yesterday. We saw the Nifty hit a fresh record high level of 25,129.6 on the intraday basis, although it closed about 77 points away from it. Nonetheless, the index definitely gained for the 10th straight session, and what has turned out to be the longest winning streak since September-October of 2020. So that's a big win that we are looking at into the markets. And this surge has also come in despite the underperformance of the big heavyweight banking stocks, as the day clearly belonged to the IT stocks as of yesterday as well. Not just that, the index has also turned positive for the August expiry now. And in case we actually close positive today, or probably above 24,834 levels for sure, it would actually mean the third consecutive positive F&O series for the Nifty too. Good morning to all the viewers and good morning, Shail.
Good morning, ladies and gentlemen. We are on a fantastic monthly expiry for August, and all cues which were looking positive for the last 10 working sessions have now turned mute. So we've seen a fantastic rally, as Sakshi points out, from August 14 onwards. The Nifty itself is up to the extent of 960 points or 4%. If you look at the August expiry, the index has added about 2.4 percentage points, and the trading range has been a fantastic 1200 points. From a low of 23,893, the close yesterday was above 25,050. So the more important thing is that it is now in a consolidative band. The index has closed above 25,000 for the 3 days in a row, and most probably, given the cues that are coming in from Wall Street, a negative close on all three major indices, because the guidance from Nvidia, the world's most important company these days, for the third quarter revenue has been on the lower edge, although its second quarter performance has outstripped all expectations. Sakshi will give you those details. Let's get back to our markets. What is most important is that after this 10-day session of gains, you will see traders turn cautious on the expiry that is today. Most likely you will see some kind of profit booking happening, and as Sakshi was pointing out, the gains have largely been driven by IT stocks, a smart gain coming into counters such as Infosys, a fresh 52-week high, TCS, a record high, mid caps like L&T, Mindtree, Wipro, HCL Tech, screaming gains over the last 2-3 weeks, and that has sort of buttressed Nifty's march above 25,000. What else is looking important? The three major gainers on the Nifty in August's expiry were Shriram Housing Finance, Bajaj Auto, and Divi's Labs. They were up between 11 and 18%, and on the losing side were State Bank of India, Grasim Industries, and Tata Steel, down between 2.7 and 5.1%. So gainers, when they gain, are rising very rapidly. Losers, when they fall, have modest drops. So that is a typical bull market where you have super high intraday highs and marginal lows which are bought into. Now, what is most likely to happen, as is happening over the last 3 days in the options market, that option sellers will have a better day compared with the traders who look at directional view, because we are already above 25,000. We've rallied for 10 sessions, and this is a time for option selling rather than taking a directional trade. The most important event in corporate history during the year is the Reliance Industries AGM. It starts today. Reliance is India's largest company by market capitalization. It is the most profitable listed company, and of course it's the bellwether both for the Nifty and for the market. So all eyes are there. We'll be having live coverage from 2 p.m. onwards till all the way up to the evening, so please keep an eye out on that one. And Sakshi, tech stocks that have created such huge wealth over the last 2 weeks or so could be under selling pressure or profit booking because of the sell-off that we've seen in Nvidia. The counter lost 7% in after trade, even giving a stunning performance. It's all about guidance. Now, two important events, two block deals. one on Indigo. I'll request the PCR to fire the longer term chart of Indigo. From let us say February 1st till now, Indigo is up 70%, India's largest airline, and of course a cash generating machine. Will see a block deal from the Gangwal family. Remember, this is not the first block deal. The stock is a record high, and all those people who have entered Indigo in these block deals have made supernormal money. So please keep an eye out in Indigo. The other is Policy Bazaar, better known as PB Fintech. That's the RIC code. You will see a block deal of roughly 1,660 crore rupees. This is coming in from one of its original promoters, Tencent. The price is set at 1660 crore rupees per share. Again, about a 4.5% discount. Policy Bazaar is, ladies and gentlemen, hold your breath, up 102% since February 6th. And again, this is not the first block deal in this particular counter. Lots of other blocks have happened, and everybody who's got into those blocks has made supernormal money. So these are the two stocks that I'm looking at. And of course, 4 board meets. IREDA taking board permission to raise 4,500 crores. Indostar, a little known NBFC, is trying to raise 6,000 crores via NCDs. And of course, you have Jaycorp doing a buyback, and of course Kiri Industries. So these are the 4 stocks on the board meet side, 2 on the block deal side, and of course a bit of profit booking in the market. Sakshi, now tell us what has happened on Wall Street, what were numbers from Nvidia, and what are the other data points that we should look for as far as FI numbers are concerned.
Absolutely, Shail. So the US stocks declined on Wednesday. This was ahead of Nvidia Corp's eagerly awaited earnings, as the earnings came in after the closing of the bell. Remember, Nasdaq fell about 1% as the tech stocks fell 2%, as the index fell about 2%. The S&P 500 and the Nasdaq Composite both were down in trade. So the S&P 500 was down 0.6% and 1.12% loss for the Nasdaq respectively. Now, when we talk about Dow Jones, that also was down by about 0.4% towards the closing of the session. Now, as far as Nvidia's earnings are concerned, the company's revenue increased by 122%. It definitely beat the Wall Street estimates, and this was on the surging demand for data center chips as well. And the company also approved an additional $50 billion worth of share buyback as well. Although the stock fell by more than 7% in the extended trading due to the lack of specific comments on the delays in its next gen Blackwell chips as well, and of course lower than expected guidance going forward. But remember, the stock has already surged about 150% for the year already, and it's been a one-way rally for this massive stock. So there was this lacking wow factor perhaps, which indicated led to decline in the Nvidia's earnings, Nvidia's stock as well. Now, the Brent crude levels, they were trading about 1.13% higher in trade at $78.7 a barrel. Gold prices, they were higher by just about 0.3%, up at $25.12 an ounce as well. Following the Wall Street, we've seen stocks in the Asia specific market also slipping, as the Nvidia Corp's earnings lacked that factor to impress investors. Although the Chinese results helped the extent of a sell-off in the country's tech spaces or tech companies as well. Japan's Nikkei was down by 0.5%. Australia's ASX was down by about 0.6%. South Korea's Kospi, about 0.7% of a decline was there. We also saw the Shanghai down by about 0.4% and Hang Seng down by about 0.3%. The GIFT Nifty is indicating to a muted start. In fact, there could be a 50 point of a downtick on the as far as indications from GIFT Nifty are concerned. At around 25,000 is what we could see the opening of the Nifty in today's trading session. As far as the overseas investors are concerned, they turned net sellers of the Indian equities after being buyers for 4 straight sessions. Foreign portfolio investors offloaded stocks worth about 1,347 odd crore rupees. We did see the domestic investors turn buyers again after selling for just a single day. They invested in the Indian equities worth about 439.4 odd crore rupees as well. We'll also keep an eye out on a whole host of stocks then today. Some indications have already been shared by Shail to you. RIL will be the most important stock to watch on account of 2 big news flows. One will be the AGM that we will be tracking from 2 p.m. onwards. And second will be the news that came in last evening of Competition Commission of India clearing the Reliance Disney deal. Remember, the combination will involve Reliance Industries, Viacom 18 Media, Digital 18 Media, Star India and Star Television. And Reliance, Viacom 18 and Disney India will be forming a JV under which Viacom 18 will be merged into Star India. Reliance Industries will be investing about 11,500 crores in the JV, and RIL will control the JV and own 16.3% stake, while Nita Ambani will be the chairperson of the JV as well. In fact, this will also create the largest behemoth of media industry in India as well. So that's something that all of us have to keep in mind, and those are the two details which will keep Reliance Industries investors hooked to screens today. Apart from that, of course, as Shail has pointed out, Indigo will be in focus. Rakesh Gangwal may sell up to $850 million worth of stake in block deals. Indicative price at 4,593 rupees per share, a discount of 5.5% on Wednesday's closing price. There will be also a 150-day lock-in period for the next tranche of the sale right there. For PB Fintech, Tencent Cloud Europe is likely to sell about 2.1% stake via block deals. Floor price seen at 1660 rupees per share, or a discount of 4.5% to Wednesday's closing price as well. Lock-in period will be 60 days for further sale right there. Lemon Tree Hotels, it signed an agreement for a 72-room property in Madhya Pradesh, Ujjain, and this property will be managed by the arm Carnation Hotels. KEC International, it's won orders worth 1,171 odd crore rupees from the Middle East. The year-to-date order intake is now at 10,000 crores, a growth of 80% as compared to last year. Sonata Software, it's one large multi-year, multi-million-dollar strategic outsourcing deal from US-based Premier Healthcare and Wellness Company. So the stock will be in focus. Vedanta will be in focus again, as the Anil Agarwal-owned mining conglomerate will now consider third interim dividend at its board meeting on September 2nd, as it has informed the exchanges. The company has also announced that the record date for the said dividend has been fixed at September 10th of 2024. KEC International, the company has won orders. I've already shared 1171 odd crore rupees transmission orders right there. Macrotech Developers, that's another one that you should be keeping a keen eye out on. The realty firm plans to acquire about 100% of equity stakes in OPEX FV Services and One Box Warehouse Private Limited through executed share purchase agreements, and these acquisitions will be valued at 46.7 crores and 49 crores respectively, and will make both companies wholly owned subsidiaries of Macrotech Developers. NLC India, the state-owned company, has signed a 25-year power usage agreement with Telangana State Discoms for 200 megawatts of solar energy under the Central Public Sector Undertaking scheme as well. Vodafone Idea is also something that you should be keeping a keen eye out on. The Supreme Court has scheduled the hearing of Vodafone Idea's curative petition in the adjusted gross revenue case, or the AGR case, on August 30th, and this follows Supreme Court's acknowledgement of Vodafone's submission against the 2019 judgment on the payments to the government as well. So keep an eye out on all of these stocks. Shail.
8:45, ladies and gentlemen. We are eagerly awaiting for Mr. Devin Choksi, MD DR Choksi FinServ, to join us, and a little later Mr. Rajesh Palvia, Head of Technical and Derivatives Research from Axis Securities, will be with us. Just a note of caution, a lot of investors, not only in India but overseas, actually more overseas than India, are raising supernormal cash levels, and that is ahead of the US Fed event, which is on September 17th and 18th. There are 100% chances of a rate cut on Wall Street. About 60% of the market feels that a 25 basis point rate cut is in the pipeline, followed by another one in November. The aggressive part of the market feels the economy needs another rate cut of 50 basis points to begin with. All said and told, a lot of sensible people, including Mr. Warren Buffett, are raising large tranches of cash. Remember, he sold nearly half of its Apple stake, and over the last 2 or 3 days, he sold $5.5 billion of stake in Bank of America. All told, Berkshire Hathaway has about $250 billion worth of cash now. And is this a sign that the markets have topped out? Only time will tell, but it is our job to keep you informed. And this is what is the state in many mutual funds, many ultra HNIs and many portfolio management schemes in India that cash levels have been raised. Either valuations are not worth it at current levels, or people say that cash is also an asset and is a strategic asset. Let us see what happens. We'll be waiting for Devan Bhai to join us, and during that while, let me share some exciting data for you as far as the FNO expiry is concerned. You'll be surprised to know that there are stocks that have gone up by about 30% in this expiry, and two names that at least Sakshi has talked about more. Trent is the top gainer in the FNO expiry, up 35%. Let's get the man himself. Devan Bhai is with us. Namaste Devan ji, a very warm welcome. Markets consolidating above 25,000. We have a fantastic August expiry ending today, and the crown event is RIL's AGM starting 2 p.m. today. What are your expectations from Mr. Mukesh Ambani, sir?
Yes, sir. Good morning. Well, I think on one side, the market is doing what it is supposed to do. I think with the amount of liquidity that it is attracting, there is no relentlessness as far as I think the correction is concerned. The market wants to remain absolutely resilient in this kind of corrections and probably trying to buy anything and everything which is available at a discounted value. So the market, I think, is fundamentally looking better in my viewpoint. And as they always say, in the game of long jump, I think you take two steps back and then probably run ahead and take a larger jump. That's what some of the large cap stocks are doing currently, as I read it. Some of the companies are becoming really big in their size, and I think the visibility in next 3 years, 4 years is becoming something really extraordinary. So, given that background, I feel that I think the leaders like Reliance, I think will have a larger role to play largely because of the fact that I think this particular company has been consistently investing a larger part of the money in the new businesses. The entire ecosystem included in the area of renewables. They are spending in 75,000 crore worth of investment in this space. And my guess is that I think by the time I think they would end up completing, this amount would have probably moved up and moved up significantly. Something on that front, I think we'll definitely watch out for as far as the Reliance AGM is concerned. I also believe that I think they would be the first ones to possibly come up with the storage mechanism, the lithium refinery kind of a business, I think, which is something I believe is going to be a reality going forward from Reliance side. So obviously processing the lithium, allowing the battery storage to come up, bringing down the battery prices significantly is something which Reliance is expected to do, and that's what I think one would like to hear from Reliance. Maybe on 20th of December, they are likely to make the formal announcement for it, but in this AGM indications might come. On the other side, the consumer-facing businesses, the retail and the geo platform, both these businesses are showing robustness as far as I think their cash flow from operation is concerned. Put together, these two businesses are now annualized basis, I think somewhere around 90,000 to 1 lakh crore worth of EBITDA contributors into the total balance sheet of the company. So certainly, I think this is one area where one would like to understand from the company and the promoter about when these two companies are likely to get listed, valuation unlocking will take place, how exactly I think the Reliance shareholders will get the benefit out of it. These are some of the points on which I think the market is very key. But I'm more concerned about, I think, two issues. How exactly you are going to maintain the decarbonization process in your conventional business, that is O2C business, is something which we would like to understand more in detail from the company. Because that's where probably next 10 years of journey would be. Next year, I think the 10 years of investment would be. That's what I understand. So these are few points I would like to understand in the AGM of the company today.
Good morning, Devan sir. Thank you so much for joining in. Of course, it's an important day by way of the AGM. And just last evening, we are now one step closer to the Disney merger with Reliance Industries, the whole behemoth that will include about 100 channels, a 40% share in the TV segment, about a 35% share in the digital segment. How are you looking at this mega merger? What kind of opportunities will exist within the media pack for investors to really look at? How should one really look at the behemoth now, also with the media angle getting bigger within the conglomerate?
Yes, I think it's an interesting proposition, Sakshi, as far as this particular merger in the media business is concerned. Uh, Given the size of India's economy and given the growth in India's economy, it is very clear that the media business is one of the biggest components, I think, going forward. Over next 10 years journey, if you counting it, I think this business should be growing big in size. I think as one has experienced from the Western world's experience 50 to 100 years. I believe that I think there are two things which have strategically happened here. On the one side, you have a significant amount of broadcasting content, which both these companies put together are bringing in together. Particularly, the Geo is having a larger amount of play in the broadcasting part for the other than sports. And in the sports space, I think the internet part of the activity is basically creating a significant amount of buzz out here. I believe that given the strength of Disney in the broadcasting space, as far as I think the media rights are concerned, and given the strength of Reliance Geo is concerned, I think in this particular space where they have acquired significant amount of media rights, I think from the point of view of broadcasting of and providing the streaming of the games, the cricket in particular. I guess I think this is one size, which is one business I think which is going to give significantly large amount of revenue repercussion into the books. About 50 to 55% of the revenue becomes, I think, EBITDA in the gaming business. In particular, I think the larger sports events like the World Cups and others, among others, in the cricket space. So I think this is where probably this company is going to have a fantastic advantage going forward. Maybe I think the CPI clearance is also going well because I think they've given a commitment for ensuring that they will not shortchange the advertisers. So from that perspective, I think you are likely to see the size growing. Kind of cross-selling also happening on both platforms as far as advertisers are concerned. And that's where probably I believe that this company looks brilliantly positioned. The group is brilliantly positioned as far as I think media business is concerned.
Okay. Devin bhai, how are you seeing these run-ups that are happening in stocks like Trent, 35% higher in the month of August alone, of course a record high, and now it's going to enter the Nifty from September 30th onwards. Does it merit a note of caution? Are investors seeing much too much, or is a lot of liquidity chasing very few shares? How would you advise? What would you advise to a retail investor who has no presence in Trent and is very anxious seeing this run up?
So, Shail, I think before assuming a serious answer to your question, I think I would give some amount of lighter comments on this particular subject. The generations have changed. I think people like us, I think, are two-third over and one-third left as far as our lifestyle is concerned. And I think the new part of the generation who has come in their 20s and early 30s, they want to basically experience everything and everything. They are not fully comfortable with, I think, giving the conventional norms of valuations, etc. People like us, I think, would always talk about valuations. I think over there, I think they believe that whatever is there in hand, I think, spend it. I think the same situation is happening that whatever is in hand, I think, invest it. And they are not concerned about the valuation aspect at all. Uh, when if they are right or not right, I think it is not our job. We cannot be judgmental. But my understanding is that I think every business is good at a valuation, at a value. I think today majority of the businesses are basically being bought without looking at the fundamental aspects of the values and the valuation. And that's where probably I think the concern would be. The conventional wisdom says that I think this particular exuberance doesn't last long. But here we are in a different situation today in our economy. we are having a significantly large size of GDP. We are having significantly large size of investment in out of GDP, that is 30%. And of that 30%, about 40% of that investment, I think, is basically going into the financial assets. So the liquidity push is significant in the market. And that's where you are seeing a relentless boom as far as I think the individual stocks are concerned. If in one particular month, if a particular company has taken a leadership, in the next month, I think some other company will take the leadership. Investors are also, I think, becoming traders. They are rotating their portfolios in no time. So these are all some of the traits which we all are experiencing. And maybe I think they are right. I think the new generation of people, they are right. I think this is how they want to invest in the market. So we have to enjoy. I think we have to do only one thing right, child. That I think people like us with experience, I think identify good quality stocks, sit tight on it. And when the time comes, I think allow them to, I think, give the push as far as I think our appreciation in the portfolio is concerned. So that's what we do currently.
That's a very, very
Okay,
pertinent
just a
point.
note
Yeah.
of caution here. Sakshi, just a moment, please.
Sure.
Just a note, please. Ladies and gentlemen, for all those who are thinking of buying Trent at current levels, let me just point out two learnings from the market. Devan Bhai has very rightly said people like me and him are now almost extinct, but 2.5 lakh crores worth of market capitalization. If you look at trend from 7th February onwards, the counter has gone up by 137%. It was at 3,000 rupees on 7th February and it is at 7,242. Everybody knows that it is going to be a part of the Nifty, and that essentially, as life has taught us over 37 years, means that the stocks pause after getting into the Nifty or a main index. They have rallied so much, attracted the index attention of index makers. They have included it and then they come to a halt or they rest. Whether that will happen to Trent or not, we don't know, but that is history, and history, if does not repeat itself, it often rhymes. So be very cautious. Sakshi, yours.
Absolutely. On the valuation part, you made some very important points that everyone needs to remember, Devendra. And I will just take this question to the overall markets now. We just did see yesterday how the Nifty hit another fresh record high level. Now, when we look at it valuations wise, how would you really look at it? On the one hand, we are looking at, investors across the globe raising the cash levels. There are lots of block deals and bulk deals that are taking place as of now as well. And the retail investors, like you also pointed out in this gush of liquidity, are all in right now. So looking at all of these scenarios, is there any risk that one should be aware of?
Well, I think risk level also increases when the size increases. That is hand in hand going together. In my viewpoint, I think anything and everything is good, I think, at a price. Today, if because the stock is coming into the index, and that is where I think the buying is going to take place, for which the stock price has achieved the crazy level. Now, if that is the situation with one and any other stock, let me also remind that some of the index stocks, I think they are actually valuation levelers. They actually rationalize their valuations once they get into index. Look at, I think, number of stocks which are there into the index and look at how exactly they are valued today. Some of these companies are fantastic. Some of these companies are very huge. And at the same time, I think their valuations compared to their peers in mid-tier and the small cap space, they are comparatively bargain. So in my viewpoint, I think let it come into index, let it, I think, assume a higher amount of activity on derivative side. Probably, I think this stock will find its valuation level automatically because the market is the best expert on giving the justice to the valuation. That's what we tell. And I think my take is that whenever comfortable, I think investors should take some capital out of extremely high and rich valuations. If not for permanent good, for at least short-term good, I think one should try to take some capital out of it and stay tight, I think, for the best opportunity next available to them.
Right, ladies and gentlemen, let's look at pre-open trades. The Nifty marginally on the back foot, 34 points lower at 25.15. Remember, it's the monthly expiry today. Mostly indices trade flat. We had a fantastic rally on the Nifty over the last 10 trading sessions. up 900 points. Let us see what Thursday holds for us. Now, what is buzzing within the index? HDFC Bank is 13 rupees higher, 1650. Reliance, birthday boy today, 47th AGM, 12.4 rupees higher, 3009. What about ICICI Bank? This is the one that's pulling the Nifty lower, 18 rupees down, 1205. What are tech stocks doing? Look at Infosys, look at TCS, both on the back foot. What else is in gain? Okay, Bajaj Finserv, third of a percent higher, 1720. That's how it is as far as the 10 index heavyweights are concerned. 5, 6 in the green, 4 in the red. The Nifty flat as flat can be. Let's shift focus immediately. Two stocks that I'd like to look at is TV18 broadcast. Sakshi and Devin Bhai have discussed the news in detail. Reliance, in its mega merger on the multimedia side, has created India's largest media organization. TV18 broadcast 4.7% higher, 50.2. This is how markets are reacting. Let's look at the most active counters. I'd like to see what Indigo is doing, and what is the action on PB Fintech. Both of them will come on your charts. They have block deals lined up. Paytm upgrades coming in, and a positive move from RBI to allow foreign direct investment in one of Paytm's business, 3% higher at 555. What else is buzzing which acquires our attention? Okay, let's look at top gainers. Apollo Hospitals, third of a percent higher. Wipro, about a percent higher. Nothing much happening. Market flat as flat can be. This is how pre-open has come up. Nifty 16 points lower, 25,000 is still with the bulls. Devin bhai, any comment on PB Fintech and Indigo at current levels with these block deals getting in newer investors?
Honestly, not paid enough attention to its shares, so would refrain from putting any views at this point of time.
Okay. Let's also look at a slew of these IT firms. I'll ask Devin sir as to what should one's strategy be within this space. We've seen fresh 52-week highs on Infosys come back, record highs on HCL Tech as well, mid-cap IT in fine fettle. Do you think the time to invest in this is passed by, the best time, or is it still available for all the investors who've not gone big on the IT space as of now?
So I think, Sakshi, my understanding is that some of these IT companies are like your FMCG companies now. Uh, they would be producing something which is going to be required on a day-to-day basis. What I'm
Yeah.
trying to say is that I think the business model of these companies has changed from project-driven activity to a service-driven activity. So to a greater extent, I think most of these companies are producing the environment, the entire technology blocks, which are largely, I think, used as a software as a service or a platform as a service. So from a perspective of looking at, for example, we take an example of AI because that's the buzzword which is right now happening. Most of the tools which are required for accessing the AI platforms, I think, which are underlying operating systems, or even for that matter, I think the chip blocks. Most of the tools which you require for that, I think, is being produced by likes of TCS, likes of Infosys, HCL Tech kind of companies. And those tools are then ultimately used by the use cases, the users in different industry verticals, be it manufacturing, be it telecommunication or retail or whatever it is. Now, our Indian IT companies are quickly moving in this space. In fact, I think a significantly large part of their manpower today is basically working on the AI part of the developments. So, if these tools becomes, I think, the platform as a service provider or software as a service provider in some cases, I would think that I think their business model will undergo change in next 5 10 years, and they would be like FMCG company, as I mentioned, an example or analogy, wherein they will probably have significantly large amount of business to talk about on a regular basis. Uh, Whether I think one should buy IT stocks at this point of time or no, maybe currently the market has basically bought on a contra buy basis these stocks and added the weight in the portfolio, so the stock prices have gone up. But generally, my take is, and I have been vocal about this subject, that whenever at a lower level, when you enter into some of the large cap IT companies, you hold the prospects of making 20-25% return out of it. And that's what I think is these companies have actually validated today. So I would be comfortable buying kind of correction in the market, given the underlying understanding of the subject.
907, ladies and gentlemen, the pre-open is settled as it can be. Remember, it's the monthly expiry. You have Biocon and REC and PFC. These are three stocks that has been amongst the top gainers in FNO. No stopping granules, sixth of a percent higher, and of course Muthoot Finance also in the green. Most likely, ladies and gentlemen, you will see a digit change for the better in Muthoot Finance in a couple of days from now. What else is buzzing in terms of volume? Okay, Indigo 2.65% lower, 4731. Absolutely no problem at all. This is a trade that is being discussed in the market. How about PSU stocks? What is settled? JNK Bank 5% higher, 114. NLC, Sakshi pointed out, was news led. NLC India 1.3% higher, 2280. They've signed a 25-year power purchase agreement with a government agency. Devin bhai, anything in the mid cap and small cap segment that catches your fancy, providing better valuations and higher prospects in 2 years' time? Nothing for today or tomorrow, but a nice hold for a 2 year period. What looks good?
Very interestingly, I think we find some of the engineering R&D space companies, some of the EMS companies, uh, which are basically, I think, showing great signs of growth over next 3 years to 5 years, the visibility of growth for next 3 to 5 years. That may include in the list, I think, likes of Tata Technology, Tata Elxsi, Tata Communication for that matter on one side, or LTTS, LTIM kind of companies, or KPIT kind of companies. They are some of these companies which are looking interestingly positioned from prospects of next 3 to 5 years. Similarly, I think the insurance business, I believe that life insurance business is showing a distinctly high amount of promise hereafter. Also because of the fact that, as I was making a point a little earlier, that you have a significantly large amount of savings and investment as a part of GDP now, which is growing at a rapid speed. Soon we should be seeing our economy in next 10 years becoming 10 to 12 trillion dollar economy from $4 trillion economy. In that situation, assuming that I think you have got 30% savings and investment component, and out of it 40% goes towards financial assets. Within that, you have the insurance as one segment, which I believe is going to be extremely attractive segment going forward. Some of the insurance companies directionally for next 10 years could be, I think, a good wealth creators, as I understand. Will be a game of patience, I believe. I think nothing happens in this business in one year, 2 years. Actually, I think we have remained invested over more than 5 years, and suddenly after 5 years, you find that I think this kind of businesses have started generating multiple rate of return in your portfolio. The size will become so huge. Look at LIC, how exactly I think this size has become. I think similar situation could happen with other insurance companies. So I would think that I think bunch of opportunities available in the businesses. All you require is I think a significantly good amount of patience to stay invested for next 10 years and very patiently.
Okay, have patience and stay invested in these good quality names, and this will reap benefit in the next few years. Consumer durables is another space that I wanted to discuss with you, Devin sir. We've seen these white good companies also showing some traction. Gems and jewelry, particularly, has come back in flavor. We are headed into the festive season as well. These spaces have largely stayed. Dormant in this entire calendar year. But do you think the time has come for these companies to outperform?
Well, a difficult one actually. I think whether they will outperform, I'm not too sure. I think the consumptions are increasing. Obviously, I think because of the higher amount of purchasing power, and so would be the business conditions for these companies. I think undoubtedly. Whether they will outperform on the stock prices, I think very difficult question to answer, particularly because I think most of them are factoring the high valuation, the high valuations, all the possibilities of higher consumption. So whether I would be a buyer of fresh, I'm not too sure. Yes, I think if market gives some correction, a decent correction for any reason, I think that would be the time to buy into those stocks. Generally, for general companies, we believe that I think the best time to buy would be on Dhuleti Day, and best time to sell would be on Dhanteras Day. Because on Dhanteras Day, I think you already have higher amount of demand taking place. So I think whatever you bought on Dhuleti Day, I think you get an opportunity to book your profit in 6 months' time if one wants to trade. This is how I think we believe this business. I'm not an expert on this subject, but I think this is a behavioral part of the subject understanding that I have developed, and that's where I believe that I think it could be a better opportunity to do so.
It settled 2.4% higher, 1780. The transaction has been done, ladies and gentlemen. The one that we talked about at 1660 rupees per share, 10 cent, selling 2.1% stake in PV Fintech. Let us see how the stock reacts from now on. Indigo as well, that's down about 2.5%. Two major block deals that have come in. Let's get Devanbhai into the conversation as far as the PSU stocks are concerned. Devanbhai, again, the massive run-ups that we've seen in PSU stocks, many of them have now been absorbed, and the market is now moved on. Many of these stocks see decent amount of profit booking within the PSU space at these valuations and at these relatively lower prices. Maybe one or two stocks you can name which look good to you, sir.
Um, I always like shared, I think the businesses of PSU companies, but I have never been liking the investment thesis in PSU companies for whatever reasons. I buy the argument that I think most of the PSU companies are driven by the government's extraordinary amount of spending for next 10 years. And that is where some of these companies are going to be sitting on a larger prospects going forward. So I buy that thesis. But to buy a fresh equity portfolio of some of the PSU companies, I would probably, I think, try and go with a value buy like LIC. I believe that I think this is one company where one remains, I think, extremely comfortable buying into the portfolio because of the underlying asset base that this company has created over a period of time. So suppose if you are looking at the terminal value concept, I think in some businesses like insurance companies, I think you are going to get the fantastic valuations created for you over not 1 year, 2 year, but next decades. I think that's where probably I think you believe that this kind of businesses would remain relatively strong in your portfolio. Whether one would have that much of patience to stay invested with insurance business for the period which I am indicating, I'm not too sure. But since you are asking, I think I would be more comfortable protecting my capital, stay invested in a robust business like insurance, stay buying assets like LIC, where I think they've got multiple investments in different other asset classes, and I think allow my investment portfolio to remain protected against any ups and downs or volatility. That's what I would do in this kind of environment, buying some of the quality stocks in the portfolio.
Okay, ladies and gentlemen, the markets are upon us. It's a flat open, 30 points lower on the Nifty. The Nifty Bank 76 points lower. The IT index giving back 200 points, and the Nifty Bank, the Nifty 500 index also opening marginally in the red. Remember, we've had fantastic 10 days. This is a time for caution, and this is a time for bit of profit selling. With that background in mind, ladies and gentlemen, let's start conversation with Reliance. The big boy today, happy birthday, 47th AGM starts 2 p.m. at the counter, 5.7 rupees higher at 3001. HDFC Bank a rupee lower, 1636.2. What else is buzzing in the green among the index heavyweights? Okay, LNT 9 rupees higher, 3698. ITC a rupee 20 higher, 498.50. Tata Motors 2 rupees higher, 1076. There's absolutely nothing happening on the Nifty on monthly expiry day. Axis Bank and ICICI Bank are amongst modest losers. Let's look at the most active counters when it comes to volume. Okay, Indigo is 1.9% lower, 4769. The block has happened, as also PB Fintech, which is 1.2% higher, 1765. NBCC, ladies and gentlemen, this is the bonus baby. August 31st, the board meets 4% higher at 203, reclaiming part of the profit that it had made yesterday. RECL, RVNL 1.5 and half a percent higher. Very quickly, let's look at top gainers. Sonata Software 7% higher, 671. TV18 Broadcast, the realignment and mergers within the Reliance Group in their media space, bringing in value 5% higher. India's largest media organization now trades at 50 rupees 30 paisa. Concord Bio 1706, 5.7% higher. KEC International 3.5% higher, 898. NLC India, Sakshi pointed out, 1.7% higher at 281 rupees. Sakshi, this is what I see. What are you looking at?
Telecom stocks will be in focus today. Shail, Bharti Airtel up half odd percent, Vodafone Idea ticking higher as the top moving F&O mover, and this is because Supreme Court will be listening to or hearing the AGR dues plea by Vodafone Idea and Bharti Airtel as well. Remember, this is a long pending issue, and any favorable outcome could significantly reduce the AGR burden on the telecom companies. Therefore, keep an eye out on the telecom companies, both Vodafone Idea and Bharti Airtel. They are both showing upticks in the initial action. NBCC, the strong mover which has been continuously surging, is another 3.5% higher in trade today. That's another one that you should watch out for. PFC and REC, you should be looking at both these power financiers. Brokerage houses have initiated their coverage with higher targets. Both these stocks are showing an uptick in the initial trading action. Sonata Software already indicated by Shell. Remember, this is a reaction to the multi-million-dollar strategic outsourcing deal from the US-based Premier Healthcare that Sonata Software has got, and the company is reacting positively to that as well. You have another company, Paytm, that's reacting positively as well, and PB Fintech is another one that's moving up. Wellspun Living is also one stock that's been moving up pretty sharply in trade. Let's look at the IT stocks. HCL Technologies, let's look at that one. The stock that has hit record highs in recent past, and you do see now brokerage houses upping their targets. Both Morgan Stanley and Jefferies have increased their target prices. Morgan Stanley has a target price of 1705. And the stock is trading around that level as well, as they are confident of the management, optimistic about the near-term growth opportunities in that space. Right now, it's the small caps, the Nifty Next 50, financial services and the pharma spaces that are still holding up. If you look at within the pharma, healthcare stocks are moving up. Apollo Hospitals is up over 1%. You have Cipla that's gaining ground, about 0.7% of an increase that you can see within the pharma pack. Then you also have some NBFC names, financial services names. Bajaj Finserv continues to inch higher, half odd percent of an increase on that one. Shriram Finance, another move on the higher side. From the IT pack, you do have Wipro and Tech Mahindra holding up their ground, about 0.4% higher in trade. What's not doing well today? It's Hindalco, that's down by 1.4%. Ultratech Cement, Maruti Suzuki, Grasim, Tata Steel. These are the stocks that are still lower, and even Infosys is seeing some profits being shaved off. PSE index is up over about 0.2% higher in trade. REC PFC has the top movers, with REC 2.5% higher there. NHPC, you also have BPCL that's moving up 0.3% up. NTPC Power Grid. So the power grid in the limelight in today's trading session. Within the small caps also, let's look at the stocks that are actually doing well right now. The small caps have been continuously surging higher. Top moving stock here is Sonata Software. KEC International, another stock that was in news with the orders of 1171 crores. The stock is up 5.5%. NBCC I already shared, 3.5% higher. You have Jammu and Kashmir Bank, NLC India, Raymond also picking up pace now, 2.5% higher in trade at 2002 odd levels. You have Amber Enterprises, Canfin Homes, Wellspun Living as some of the other stocks, and Tata Investment Company that Shell had highlighted 2 days ago. The stock was at a 20% circuit. That's up another 1.5% higher in trade. CAMS is also moving up in trade. Within the new age internet basket, apart from PB Fintech and Paytm, you have Honasa Consumer that's picking up pace as well. Let's look at what Zomato is doing at this point in time, and also let's check what Ola Electric is doing at this point in time as well. These are the two stocks that we consistently track. Zomato is up by about 0.2% higher, and Ola Electric is flattish with a negative bias at 125 at the current levels. Share.
Ladies and gentlemen, let's look at all-time highs. Concord Bio. This is a little known pharma company which recently got listed about 1 year ago. 11.5% higher, 1800 for you. Very, very strong volumes coming in. And amongst 4 plus 3, 7 stocks that have hit highs, pharma are Granules 70680, Alchem Laboratories 6015, Cipla 1632, Eris Life Sciences 1366, and of course Concord Bio. So 6 out of 7 stocks that are at record highs are pharma. The other one being Bharti Airtel. I'll also mark Idea Cellular, Vodafone Idea. This is now the second most active trading counter. About 174 crores worth of transactions done, 1.9% higher. Remember, we highlighted it yesterday when the news came that Vodafone Idea has petitioned the government of India to remove guarantees that are needed on its outstanding payments to government of India. Let us see what happens, and of course the case in the Supreme Court for AGR hearing. I'll also like to mark strong moves that are coming in the most active counter as far as prices are concerned. Let's look at the top gainers which are moving with very strong volumes. On Concord, already 4.5 times the volume has happened, 3,26,000, and we are only 7 minutes into trade. Sonata Soft, the textile crisis in Bangladesh, and a lot of move coming into Indian textile players. NBCC 4% higher, 204, and of course you have Granules flat at 706 but an all-time high. Sakshi, what are you watching?
Let's also look at the stocks like Aptus Value Housing. Citi had a brokerage report with a buy call here and a target price of 358. The company is expanding its footprints in Maharashtra and Odisha, adding about 20 odd branches each, a 0.5% of an improvement right there. Housing finance companies are also moving up in trade pretty sharply. Let's welcome Rajesh Palvia on the show with us to get us his first take on the markets. Mr. Palvia, he's the head technicals and derivatives research from Axis Securities. Good morning to you. What's the sense that you're getting of the markets after record highs were hit yesterday, and where would you be looking at afresh in today's trading session, which is also the monthly expiry for the Nifty? Any key stocks?
Good morning, Sakshi. Good morning, everyone. So, looking at overall setup, we still hold our bullish view, and we believe that expiry would be around 25,050 to 25,100 range for this monthly expiry. The way put writers have added their position in the previous day also at 24,900, 25,000 strike, that clearly shows that 25,000 may act as a good support area at this moment, and until we are not breaking below 25,000 level, I think one should remain on the bullish side of trade only, and possibly expiry would be around 25,150. Bank Nifty is still facing some supply pressure at higher level. So still Bank Nifty is not able to take out its major supply zone, which is placed at around 51,300, 400 zone. That needs to be watch closely at this juncture, because until the Bank Nifty not crosses above 51,300, 400 zone, it may remain under consolidation for some more time. But on the downside, 50,750 is the key support area for Bank Nifty also. and until the bank Nifty holds above 50,750, one should use any minor decline to be as a buying opportunity in this market. So overall structure is bullish, and we believe that momentum may continue further, and we could see further higher level from here onward. Possible target 25,200 we can see in the Nifty for in the next coming trading sessions.
Right, ladies and gentlemen, there is a nice green tick on Indigo as well now, given that the block deal pressure is now out of the system. So this is how stocks are reacting. A mild red tick the moment the deal is announced, because it's at a discount to yesterday's closing price. Once the deal is through, you see good moves coming back into. Namaste Rajesh ji, a very warm welcome to you. Anything that you would want to comment on high flying Indigo record high, not obviously 48.45.
So, Shalji, this is clear confidence on market. The size of block which has absorbed in the market, and stock again move back to the all-time high trajectory. So this clearly shows that the confidence on the street, and whatever promoters are selling in the markets are absorbed by the investors. So I think Indigo overall structure is bullish. Stock is at all-time high trajectory. I think it's a good quality stocks in aviation sector. I think this is the only stocks where one should keep their investment if you want to diversify your investment in aviation sector. And we believe that the upward momentum may continue for Indigo, and possible target we could see towards 5,000 to 5,200 also. So long-term structure is bullish. Buy on dip should be your strategy at this juncture. 4,700 is your stop loss if you are still if you are bought in the decline. I think 4,700, 4,650 is the area where Indigo is having support for near-term structure. Until these levels are intact, I think possible target 5,000 to 5,200 we can see in a positional perspective.
Right. Now, Rajesh ji, how would you look at these power financing names which are making a comeback, both PFC and REC? They're rallying in trade. Brokerage houses have initiated their fresh coverage on the stock after having seen a sharp run-up even in the previous leg of the rally as well.
Yeah, definitely. So after a brief corrective move, most this PFC REC have started again moving up, and the way PFC has again managed to sustain above 540 level, we believe that PFC may extend its gain. Stock is now trading about to 20-day, 50-day moving average. So structure is bullish for PFC for near term, short term structure. Stock is moving in upsloping channel on the daily chart, and we believe that here we can see target towards 560 to 565. So I think one should hold their long position in PFC with stop loss of 540. Again, REC is also looking attractive. I think REC one can also look to buy at this juncture. The way these both companies have moved up after a correction, I think REC has potential to continue its upward momentum towards 655 to 660. So one can hold their position also in REC with stop loss of 620.
Okay, got it. Apart from
9:30,
this,
ladies and
yes,
gentlemen. Yeah, please continue, Sakshi. Continue. No issues.
And apart from this, Rajesh ji, I also wanted to get a sense from you within the PSU stocks which are making a comeback. Which ones are those which you're tracking closely? Stocks like NBCC, Hudco, these are the ones that are actually making a comeback as well. Is there merit in looking at these stocks again?
I think PFC theme is going to continue for furthermore, months. Yes, we have seen some correction, but the way most of the PSU stocks are holding the ground for the long-term structure, we believe that again we may see a good traction on the buying side for all these PSU stock. So I think yes, one should focus on NBCC also. The stock managed to give breakout of its previous swing high of July 2024, and the way stock has given the breakout with the volume action, we believe that if stocks continues to hold above 190.92 level, there is a possibility that NBCC can extend its gain towards 220 to 230 kind of level. So one should hold the position in NBCC. Hutco is also trying to recover from the recent corrective move, and I think for Hutco 275 280 is the important support area for this correction. So I think one can deploy some long trade here also for positional perspective. And we believe that once stock crosses about 310 to 315 kind of zone, I think there is furthermore possibility towards 345 to 360 kind of level for Hutco also. So I think one can buy and accumulate Hutco also. Overall structure is bullish. Even from the PSU space, a lot of stocks from the oil marketing company or from oil and gas sector like ONGC is also looking promising. I think from power space, one can focus on NTPC also. So most of the PSU basket is now showing good traction, and we believe that as our market has already moved up to the all-time high trajectory, so buying interest will again come back to this PSU stock, and we could see further more run up from the here onwards in the PSU stocks also.
Right. I think what needs to be watched is Birla Soft. Very strong momentum building in, and yesterday's close was above 200 DMA, and now the action starts afresh. This has been one of your great picks, Rajesh ji, over the last 4 or 5 years. I remember you and I used to discuss this between 120 and 150 rupees,
Yeah.
but now at 680 and much further away from its all-time high of 861. What are the charts telling you, sir?
So it's one of the wealth creator stocks in last couple of year for investor, and the way stock is now trading above 650, 680, 660 kind of zone. I think there is a potential. Though stock was in brain period in the previous day, but again now today stock has came out from the F&O brain period. So I think the fresh buying is clearly visible in this stock, and I think. There could be a target towards 720 in the continuation of this up move. So I think those who have already bought stock at lower level can hold on the position with revised stop loss of 665. Possible target is 700 to 720 for Birla Soft. We can see in the next couple of days.
Okay, let's pause for a bit and look at the broader markets, ladies and gentlemen. I'll again bring out Indigo. In less than maybe a minute, 10,000 crore rupees have been absorbed on this transaction. So as Rajesh ji very rightly says, there is appetite, good appetite, and a very hungry appetite for quality paper even at record high levels. This is the enthusiasm and how should I say, liquidity flow that is coming into the market. No stopping REC, PFC, we've discussed this. But to you, Rajesh ji, what looks good in the auto space? Record highs on Bajaj Auto, 10,781. We have stepped into the festival season. The management has gone on record saying that they hope to sell 100,000, 1 lakh EVs a month, EV two-wheelers a month in this festive season. That's the background note, but what are the charts telling you?
So Shalji, post Ola listing, I think competition has intense for EV vehicle in the two-wheeler, and I think the way Bajaj has, now aggressive on EV side, I think, and the stock is also at all-time high. So the heat is there on the execution side as well as on the price action side. So I think Bajaj Auto, the new stock where we are seeing 5-digit number, and I think 11,000 11,200 would be the next target for Bajaj Auto in the continuation of this up move. So I think one should hold the position the way stock has moved up from the level of 10,000 level. I think another target we can see towards 11,000 to 11,200. At this juncture, we would advise to keep stop loss around 10,600, 650 zone to hold the long position. We may see further more upside momentum. And I think from two-wheeler, Eicher Motor is also looking promising. I think here also we can see a good run-up in next coming trading session. So Eicher Motor can be looked at. Here also we are projecting target towards 5,050, 5,100 kind of zone. So Eicher Motor can be also a stock where one can deploy some long trade with stop loss of 4,900.
Okay, Rajesh ji, within the pharma pack, where are you concentrating your focus right now? This space has been an outperformer in the recent past, and it continues to show us promise as well. But where do you think the outperformance within the pharma pack will come in?
So lot many opportunity in pharma space, and overall on a pharma space, we are holding our bullish view, and we believe that another 10 to 15% kind of up move we could see in pharma index itself. Almost pharma index is trading at all-time high trajectory. The stock where we are focusing from the pharma space, that is Lupin, one stock that we like, and we believe that here there is a potential for furthermore upside. Though stock has moved up quite well in last couple of months, but we believe that even at all-time high trajectory, there is a furthermore scope to move further higher. 2300 to 2350 would be the next target for Lupin. So here one can buy and accumulate this stock in any kind of minor dip. Your stop loss should be placed at around 2100. Another stock that we like is Glenmark. Again, here also all-time high trajectory for the Glenmark. And the way stock has moved up in last couple of months, series of higher high-low formation since last 5 months, stock is making higher high-low formation. That clearly shows that month on month there is a sustained buying action is taken place in the Glenmark, and the way stock has moved up to all-time high trajectory, we believe that this rally can extend to 1800 to 1850 kind of zone. So Glenmark is another stock where we are focusing to buy. Keep your stop loss around 1670. And the third stock that we like is Laurus Lab. That stock can be looked at. Here also we believe that there would be another round of rally we can see, and possible target for Laurus Lab we can see towards 540 to 560 on a positional perspective. So one can deploy some long trade in Laurus Lab also with stop loss of 445.
Okay, let's just extend our reach and look into other indices. In the Nifty Mid Cap 100 Index, you have a very, very strong move coming into the Bombay Stock Exchange. This is something that again Rajesh ji has tracked for years and years and delivered fantastic returns. It's the rub-off of NSE's application to SEBI to start the process, to restart the process of listing. 28, 27, Rajesh ji, long way off from its all-time high of 3400. What are the charts of BSE telling you?
So again, this is another stock, wealth creator stock in the market. We have seen the stock has almost dipped to the level of around 110 kind of level in the COVID low. And from that, we have seen stock has moved up quite well, and now we are almost trading near to 2800. So the kind of wealth the stock has created in last couple of years, that is a very phenomenal move we have seen. And the kind of financial inclusion which we have seen on the street, the way the new demat accounts are opening, the way the volumes have picked up, and the participation from the retail, which is month on month we are seeing a good jump. So I think these are the direct beneficiary of all this financial inclusion. So I think BSC one should hold this stock in their long term portfolio, and we believe that 3100 to 3200 would be the next target for the stock. So I think we believe that this upward momentum may continue further for next couple of year also, the way the equity markets are performing. I think BSC is direct beneficiary. I think one should use any decline to be add in their portfolio. 2600 is the stop loss to buy and accumulate this stock. 3100 to 3200 would be the next target on a positional perspective.
Okay, got it. Within the Nifty Next 50, Avenue Supermarts is something that's been buzzing now, 3.3% higher in trade. Remember, we've been discussing the entire retail story where brokerage houses have also been coming up with positive reports right there. Avenue Supermarts coming back, is there any promise or is it going to be just range bound, Rajesh ji?
So Sakshi, it was a darling stock for investor in last few years, but since last 2 3 years we are seeing that stock is in a broader consolidation range. But still, overall structure for Avenue Supermart is still bullish, and the way stock is holding above 4,800, 4,900 zone, I think there is a possibility that, again, we may see a new all-time high trajectory also, but it may take time. So I think one should buy and accumulate this stock. At this juncture, we would suggest 4850 is your stop loss, but for longer term perspective or positional perspective, one can buy and accumulate, and a possible target 5400 to 5500 we can see on a positional perspective. But on the long term, we believe that, stock has potential to cross its all-time high trajectory also. So I think possible long-term target would be around 6,000.
Okay, got it. The small caps are picking up further pace as the index is now up 0.3%. KEC International is the top mover, 6% higher. First Source Solutions about 4% higher in trade. GSPL is another one that's 3.8% higher. Raymond is picking up pace, 3.3% higher. We've discussed both Birla Soft and Sonata Software and NLC. Then you also have stocks like Canfin Homes that are picking up within the small caps basket. Canfin Homes is also among the top movers in the F&O space as well. Small caps, where are you keeping your focus right now, Rajesh ji?
Shakshi, lot many stocks are there from the mid cap, large, small cap space, and I think the way different sectors are, showing good traction, I think one can try to focus on some of the quality stocks. So I think we believe that, fertilizer is one theme where one can focus at this juncture, and I think from fertilizer space, a lot many stocks are showing good uptick. So that space can be looked at. Another space that we like is sugar space. So I think from sugar space, Dalmia Sugar is looking promising.
Okay.
Though stock has corrected in today's session, but the way stock has shown a breakout of its falling channel on a weekly chart, we believe that, Dalmia Sugar can extend its gain. Even some of the stocks from sugar space like Bajaj Hindustan and EID Perry, all these stocks are also looking good, and we believe that, here also we can see good traction. So Dalmia Sugar is our preferred choice at this juncture, and we believe that, a possible target we could see towards 470 to 480. So keep your stop loss around 420 to buy Dalmia Sugar. From fertilizer, I think lot many stocks where one can focus. RCF is also looking bullish, and the way stock has holding the ground around 200 kind of level, I think here we can see again, renewed buying action in coming trading session, and possible upside we could see towards 230 to 240. So here also one can deploy some long trade with stop loss of 190. Another space that we like is chemical space, and from that space some of the stocks are looking promising. Lakshmi Organic is a stock where we are focusing at this juncture, and we believe that, Lakshmi Organic has already completed its consolidation of on a weekly chart, and the way stock managed to view breakout, we believe that, here could be a up move towards 330, 340. Keep your stop loss around 292.
Okay, ladies and gentlemen, let me just look at some very, very high beta stocks which are back in action, and among them NHPC. 96 rupees is what I see, and this one needs to be checked with Rajesh ji also. Remember, this is one of those high beta low ticket size items, but it's trapped. Let's get Rajesh ji's view on this one. 45 lakh shares have been traded. Rajesh ji, what are the charts telling you? All time high of 118 and now 96. NHPC for you.
So since last couple of weeks, we have seen some corrective move in the stock. But if we analyze on the longer term chart, stock is very well holding above the breakout level on the long term chart. So I think till stock is holding above 90 level, I think one should deploy some long trade here, and there is a possibility that, stock may attempt to move again back to the 3-digit 100 rupees. And if that happens, I think then again we may see a traction towards 110 to 115, or we may see towards all-time high trajectory also. So I think NHPC, yes, one can buy and accumulate this stock with stop loss of 90 rupees, possible target 100 and then 110.
Okay, I'll mark TV18 broadcast, ladies and gentlemen, for a very simple reason that it is up 12% post the reorganization of and the merger of many other companies into Reliance Industries Viacom unit. 53.4, a very strong breakout. We will, as a matter of abundant caution, stay away from marking media companies because we are ourselves in that business. But it's price that is attracting attention, and that's the reason why we bring it to your views. Network 18, the second top gainer, 9.5% higher, 105.25. These are the two top gainers in NSE 500 post the reorganization and merger of many units into the media company TV18 Broadcast and creating India's largest broadcaster by revenue. So that's what it is. What else is buzzing that needs your attention and should be brought to the notice of Rajesh ji? A very smart move coming back into IT. You have intraday highs on TCS Infosys as also HCL Tech. Rajesh ji, any view on IT, any stock that catches your fancy?
Definitely, IT is again on our focus, and we believe that large cap as well as mid cap IT may continue further. We have already discussed Birlasoft, but again from the large cap IT, our preferred choice would be TCS, and we are projecting target towards 4700 for TCS. Buy and accumulate is the strategy for TCS, and your stop loss should be at around 4400. From mid cap IT, Shelji, LTTS, that stock is also catching my eyes, and the way stock has moved up in last 3 weeks, this is the third consecutive week where stock is making higher high low formation. I think there is a possibility that stock may attempt to cross its previous swing high of April 2024, and we may see a new trajectory for LTTS towards 6,000 also. So I think LTTS one can keep eye in any volatility. You can add this stock. Our stop loss is now placed at around 5580, and a possible target for positional perspective we are projecting towards 6,000 and 6,200. So LTTS is also looking promising from IT space, but other stocks like Infosys is also looking bullish. L&T Mindtree is also, LTIM is also looking bullish. So I think IT and pharma, these two space can continue further. So I think one can find out opportunity in these two sectors, and we believe that further more momentum we could see in this two space going forward.
All right. Bajaj Group is something that you need
And,
to keep an eye
Rajesh
out
ji-
on. Yes, sir.
Yeah, Sakshi, I was about to mark Bajaj Finance. Please continue. Please continue.
Yes, Bajaj Finserv and Bajaj Finance both have pulled up in the last few minutes and pulling up the entire financial services index as well. Both these stocks are at the day's high level, and strong move can be seen. Along with this, of course, Bajaj Auto is something which is trading at record high levels. But Bajaj Finserv and Bajaj Finance for you, Rajesh ji, first from the financial services space. How are you looking at these two counters?
So Sakshi and Selji, now the new theme which is playing out in market is industry group wise stocks are now moving. We have seen a very good run up in Birla Group in last couple of months. Again, then Tata Group has also moved up. Then Goenka Group, both Goenka
That's
Group
right.
have moved up. Now the Bajaj Group is now catching the eyes, and I think the way Bajaj Finserv and Bajaj Finance have moved up, Bajaj Auto is already moved up. So I think Bajaj Group is one can keep on radar, because the way the theme which is playing out in the market, that the big corporate houses are now showing good traction. So Bajaj Group can be looked at as a whole. And we believe that Bajaj Finserv, the way stock managed to view breakout, I think here we could see a next target towards 1800 to 20. So Bajaj Finserv is buy with stop loss of 1705, and Bajaj Finance again, the falling channel breakout is already done in the Bajaj Finance, and the way stock has moved up above this falling trend line. I think this is a clear trend reversal kind of scenario is taken place in this Bajaj Finance also. Possible next target we could see towards 70 to 50. So at this moment, one can deploy some long trade with stop loss of 6880.
I think, Sakshi, there is an event change that is happening in Bajaj Finance. The reason why I wanted Rajesh ji's attention on this one is that maybe, just maybe, the stock of September could be Bajaj Finance. Remember, it's just languished. It's done pretty much nothing. We've had an all-time high of 8,200, which was seen in October 2003, and from then on it's been a one-way downhill. Today the breakout is at 200-day moving average, and this one needs to be watched. It sort of failed to, it actually deceived investors and traders somewhere in June when it went up above 200 DMA, but somehow that rally fizzled. Let's hope the second one is a better one. And of course, Bajaj Finserv again 2% higher, 1748. They are buzzing both on volume and they are buzzing both on price. What else is moving? Let me highlight a small company called Ujjivan Finance at 589. This is buzzing with gains. Very sharp delivery statistic yesterday, and the counter is now up in trade. Tata Metaliks is also doing pretty well, 1110. Strong move coming in here as well. These are the two stocks that need to be watched as far as volume breakouts are concerned. L&T Technology Services, Rajesh ji is already marked. TCS running away at 4588, and SBI joining the party. I think this is as good a time as any to look at contributing stocks to Nifty's 50-point uptick. In terms of stocks that are performing on the green side within the Nifty are of course SBI and ICICI Bank. ICICI Bank contributing 8 points, Bajaj Finance 6.5, TCS 6, ITC 5, and Reliance 4 in the green. What's pulling the Nifty lower is just marginal losses on Hindalco, M&M, Ultratech, Bharti, and Maruti. So that's the picture, ladies and gentlemen, at 9:54 on weekly expiry day. 25,100 Sakshi is back with the bulls.
Absolutely. And this move is contributed largely by Bajaj Finance and other banking counters like ICICI and HDFC Bank also pulling up, along with Bajaj Finserv and a few other names from the IT and the FMCG pack. So TCS, ITC, HUL. These are the stocks that are contributing to the gains on the Nifty right now. Most of the sectors have now come back into the green, barring the pharma and the metals pack and the infra space, and slight losses being seen on marginal flattish move on oil and gas space. But clearly media index, that's up by 1.4%. All the action remains there. We have financial services, small caps, IT and FMCG names definitely aiding the sentiments right now. PSE index is flattish with a positive bias. Power names and energy names also contributing to the trade right now. Within the F&O pack, Vodafone, Idea, Bajaj Finserv, REC, Cholamandalam Investment, Balrampur Chini Mills, these are the stocks that are also buzzing away in trade. Let's look at the Nifty next 50 counters. Some of them we've discussed. Geo Financial Services is also pulling up 1.1% higher in trade. You have Zomato now inching higher, 0.5% up in trade right now. Within the Nifty next 50 stocks, BEL from the defense pack trying to pull itself up as well. In trade, ABB India is another one that's almost 0.5% higher. So some such stocks that are coming back into fore. And Bajaj Holdings also, remember, from the group now up about 1%. So the Bajaj group, as Rajesh ji highlighted, may be now taking the turn of performing in the markets right now. Rajeshji, anything else that we may have missed asking you that you've caught your attention at and you may want to share with our viewers? Any key stock?
I think, Sakshi, we should focus on banking also, and ICICI Bank is looking promising. And Bank Nifty again, move back to the day high and the green territory now. I think most of the banking stocks has recovered, and ICICI is outperforming in this move. So I think ICICI Bank can be looked at, and we believe that here we could see a rally towards 1260 to 1280 kind of zone. So ICICI Bank is also buy, and one can keep stop loss around 1200 to buy and hold ICICI Bank. And another sector where one can keep eye, that is insurance space. That space has already done well in last month, in this current month, actually in this series. And I think still the stocks, most of the stocks like SBI Life, HDFC Life, ICICI Pru, LIC, all these stocks are looking promising. And we believe that there could be further more follow-up buying action we could see in September series also. So SBI Life is our preferred choice, and then HDFC Life and ICICI Pru, all these three stocks can be also keep on their buying list for September series.
All right, Rajesh. Well, we'll thank you on that note for being with us on this morning edition, helping us with all your views, strategies and stocks, various sectors that we've discussed. Pleasure to host you. We have the 25,100 mark on the Nifty, 50 points, a half-odd century that the Nifty is already hit in the first hour of trade. The Nifty Bank is the one to thank. It's definitely at 124 points higher, 0.25% uptick at 51,262. Finance counters and banking counters leading this up move on the Nifty expiry trading session. We'll have to see how much further do we go from here on and whether we sustain these gains. If we are able to sustain the gains as well, it could be the longest winning streak for the markets since September in 2020, and of course the third straight FNO series where we will be looking at gains currently. Well, apart from this, let's look at a wrap up in the morning trades then. Nifty up 0.2%, Bajaj Finserv, Bajaj Finance pull up strongly, now 2.7% higher for Bajaj Finserv. You have Shriram Finance, HUL, Wipro, Britannia are the other counters. So the FMCG spaces are also contributing along with IT names like Soft, that's leading in the FNO space. Vodafone Idea now 16.4, about 3% higher within this space. You have Canfin Homes up 3%. And you also have Bajaj Finserv, that's also up by about 2.7% higher. PSE index, you have REC, PFC that are definitely gaining ground, NHPC, NTPC, Steel Authority and the OMCs that are gaining ground as well. Barring the metals, infra, pharma pack, rest of the sectors, they're all up and about. Within the broadest gainers, you have stocks like JM Financial now picking up in pace. Remember, broking houses and these spaces have also been in the thickest of action, almost 9.3% higher in trade for JM Financials. TV18 broadcast, as has been highlighted by Shail. Godfrey Phillips is another one that's been gaining ground, and 7.8% higher can be seen right now for the stock. KEC International on that strong order flow, 7% higher. Mavana Sugar, so the sugar space is coming back, just like how Rajesh had highlighted. Dalmia Bharat is something that he had looked at. Then we also have GSPL as another stock that's up by 5.5%. Concord Biotech. These are the kind of stocks that are buzzing away in the broadest index right now. We'll wrap it up at that, viewers. Anything else, Shail, you want to add?
Yes, actually, a close above 25,000 today. That's it.
Okay, and viewers, do stay tuned. It's going to be an action-packed day for you. 12 noon, I'll be back with another edition of Daily Calls. At 2 p.m. onwards, we will continue to be tracking the AGM of Reliance Industries. There'll be a special coverage in the closing hour of the market today. And of course, beyond that, as we analyze the key fine print of the AGM and what it means for you as the key investors right there. Stay tuned. There's a lot more to be tracked throughout the course of the day on Business Today Television.
With every passing day, the deep sexual rot in Mollywood is being exposed. The Hema Committee report has opened a can of worms in Mollywood, with the biggest actors, veterans of the industry, being exposed one after another. But there's been a telling silence from the superstars of the industry. Mohanlal, Mammootty, Dulquer Salman, Fahad Fazil, to name a few. They haven't uttered a word of support for the victims.